Hey everybody, Abdullah Shamari here. We're doing our weekly stock market review. Check it out. Let's make some money. If you aren't subscribed to my page, make sure to hit that subscribe button, crush the like button for the YouTube algorithm, and finally sign up for my Patreon. Link is in the description below. You'll get instant access to my portfolio, my watch lists, my daily readings, and finally instant posts on my stock buys and sells as they're happening each and every day. This week was a tough week in the market. The market was down in general. We saw most companies down. My portfolio is down. Other people I'm talking to, portfolios are down. Chamath posted on Twitter the other day that his account is down almost $1 billion on one of the days. So in general, the market has been lower due to a lot of uncertainty. One, with stimulus checks, what is the federal government going to do? Two, what is the Federal Reserve going to do? Are they going to continue quantitative easing, or do they have concerns about inflation, that there is potential inflation and that they don't want to do additional quantitative easing for that reason? We saw the bond rates increasing significantly over the past year to date, and now they decreased a little bit on Friday where we saw some of the tech stocks recovering, but I can imagine most of our portfolios are still in the negative. The question becomes, what do we do now? What are we going to do? What are we going to invest in? Me personally, I always try to take these opportunities, and we've seen videos all over YouTube, buy the dip, buy the dip. And again, if there's stocks that you believe in and you continue to believe in, an example is Shopify. I bought it at $1,400 and now it's at $1,200. I'm going to put more money in at $1,200 because I thought it was a great buy at $1,400. The fact patterns haven't changed, and now I believe that it's a great buy still at $1,200. In the same way, some of your other investments, if you believe in the company, the fact patterns of the company haven't changed, how they expect to grow, what their sales are going to be, their sales growth year over year, etc., then you want to put more money in those stocks and make sure to increase your cost basis in those stocks, get more shares of those stocks, so that when the economy or that stock recovers, that you're able to get even more gains. And that's what happened to a lot of people who continue to invest in Tesla throughout the years. Even with all the bad news, all the things that were happening with Tesla, they continued to invest in it, and as a result, they reaped significant gains. They were able to do really well with their portfolio. Secondly, we have a new vehicle now to invest in, which are SPACs. These are companies that are sponsored by individuals to go public and then go and find targets. I've had videos about them before. Make sure to check out my page for additional videos on SPACs. But these are low risk, high reward investments that we can make even with the uncertainty in the economy. As an example, Richard Branson announced recently the target of acquiring 23andMe through his SPAC, Virgin Group Acquisition Corporation. So he's issuing out shares at $10 per share and he's buying 23andMe. As a result, we're able to invest in the same company at pretty near the price that Richard Branson's investing in. Currently, the stock is trading in the high 10s, low 11s. So we only have about 10% risk when it comes to downside and potentially unlimited high side reward. However, once the company does finish the merger, then it's like any other stock. It could go to zero or it could go to the moon. So make sure to include SPACs in your investment portfolio. Make sure to research them. Find the ones that you think will succeed and do well. I've been following Chamath pretty closely. He recently announced 2 additional SPACs, which are RMGB and RAAC. Each of them identifying their targets and announcing their targets. One, acquiring a robotics company that is planning to compete and help other warehouses compete with Amazon. And the second is an India-based clean energy company that is a play on clean energy in India. So these are 2 SPACs that I've invested in the past week. I've bought them pretty close to $10 a share, so my downside risk is low, but my upside risk is potentially a lot. And I trust both Richard Branson and Chamath. They've done significantly well in their investment portfolios in the past, and I expect them to continue to do well in the future. These are strategies that I take with my investment portfolio. Consider them for your own investment portfolio. Let me know your thoughts. As always, make money, enjoy life. Peace.